So, you know how everyone's obsessed with AI software and whatever chip NVIDIA just announced? Well, what if I told you the real story, the one with potentially massive returns, isn't being written in code at all? It's happening somewhere way more fundamental.
See, in this new age of AI, a very old and simple truth is making a huge comeback.
And it's this: you simply can't build the future if you don't have the raw materials to make it. And that right there is the big idea we're diving into today. We're going to look past all the software headlines, go deep into the physical supply chain, and find where the real bottlenecks, and yeah, the real opportunities are hiding. Okay, just let this number sink in for a second. 1,522%. No, that's not a typo. And no, it's not some meme stock. That is the return a single, pretty obscure company delivered in 1 year. This is a whole different ballgame. So how in the world did a small materials company called AXT Inc. pull this off? Well, the answer to that question does more than just explain one crazy stock run. It actually pulls back the curtain on a massive shift that's happening right now across the entire global economy. And it's all being driven by AI's relentless appetite. All right, let's start unraveling this mystery. We're going to use AXT Incorporated as our case study, because this one little company is basically the key that unlocks this entire thesis. So who are these guys? AXT is definitely not a household name. They make a specialized component called indium phosphide substrates. And as you can see, their stock went ballistic from about $1.30 to over $22 in a year. That turned a little $50 million company into a nearly $1 billion player. So why the sudden interest? Well, turns out the AI giants, we're talking Google, Microsoft, had a sudden realization. They literally could not build their next generation data centers without this one specific thing. And here's the real kicker. This huge jump in value happened before any major shortage even hit the market. Wild.
So yeah, this was no accident. AXT's meteoric rise was the result of what the source material calls the perfect bottleneck trifecta. Think of it as a perfect storm. Three huge global forces all crashing together at the exact same moment. Let's break them down one by one. First up, geopolitics. For decades, the playbook was simple. Globalization. Get your parts from wherever was cheapest, whenever you needed them. But that world is gone. The new reality is all about onshoring and national security, forcing companies to build reliable, domestic supply chains for the stuff that really matters. You just can't import everything anymore. Force number two, the weaponization of trade. It used to be that raw materials flowed pretty freely across borders. Not anymore. China, for instance, started restricting exports of key materials that its rivals need. They squeezed the supply of inputs for Sumitomo Electric, which is AXT's main competitor over in Japan. All of a sudden, a market that had two big suppliers now really only has one that Western companies can count on. And the third force is a massive tech upgrade. Old-school data centers just used copper wires to move data around. But the next-gen AI data centers, they need something called photonic interconnects, which basically means they use light instead of electricity to communicate. This new setup requires exotic materials, like the stuff AXT makes, at something like 10 times the rate as before. So the demand side of the equation just completely exploded. But look, this isn't just a simple story of supply and demand getting tight. When you slam these three forces together, you run headfirst into something way more powerful, something you can't negotiate with: the laws of physics. And this is where we get to the core idea of this whole explainer, the bottleneck cliff. It's the point where progress doesn't just slow down, it hits a brick wall. It's when a shortage of one single critical material, something you can't replace, causes an entire industry's plan for the future to just break. And the stakes are incredibly high. The source puts it about as bluntly as you can. No glass substrates, NVIDIA's and Intel's chip roadmaps simply break. We're not talking about them making slightly slower chips. We're talking about their entire multi-year plan for making more powerful chips becoming physically impossible. And it's the exact same story for the cloud giants. Without the materials for these new photonic interconnects, their massive AI data centers just max out. They hit a hard ceiling. No more scaling. The very engine of the AI revolution just sputters and stalls. So let's be crystal clear here. This is not about a company losing a bit of market share to a rival. This is about the entire frontier of technology being unable to move forward because a fundamental building block is missing. At the end of the day, you can't code your way around physics. Now, you might be thinking this is a totally new problem for a new era of technology. But the thing is, while the tech is brand new, this underlying economic pattern, well, we've seen it play out time and time again.
I mean, think back to the 2010s. It was all about lithium for electric vehicles. The demand from EVs created a frenzy that supply just couldn't keep up with. Then, in the early 2020s, it happened again with uranium as the world rediscovered nuclear power. The pattern is always the same. A so-called boring commodity suddenly becomes absolutely critical for a new technology, and the handful of companies that control it see their values just go vertical. The argument here is that we are at that exact inflection point for the critical materials powering AI.
Okay, so this all leads to the million-dollar question, right? How can you actually spot these potential bottlenecks before the rest of the market wakes up and smells the coffee?
Well, the source actually gives us a really clear 5-step playbook for this kind of bottleneck hunting. It starts with picking a huge, forward-looking company. Think NVIDIA. Then you have to do the homework. You dig deep into their supply chain, their bills of materials, and you hunt for that one input they absolutely cannot live without. Once you find it, you check for constraints. Can the suppliers actually make more of it? Are there political risks? And finally, you look for real-world proof. Are prices starting to creep up? Or delivery times getting longer? That's when you know you might be onto something big.
And really, this quote just says it all. The AI boom, everyone knows about it. You could argue it's already priced into the market. But the risk of the bottleneck cliff, the risk that this whole boom hits a physical wall, almost nobody is talking about that. And that's the opportunity. So what this all suggests is that maybe the most important stories in tech aren't in the headlines, but they're buried deep inside boring supply chain reports. Which leaves us with one final question to think about. Will you be able to spot the next bottleneck before everyone else